Good afternoon, everybody. Welcome to the Making Money Trading Stocks and ETFs from the Active Trend Trading trader, me, and Michael Bishop, this guy over here. He's joining us today from Zurich, Switzerland. Michael, always a pleasure when you can, get on board to share with us some of the things you're doing, and also give us a nice little, a good European perspective of what you see happening both in the European market and also as it's connected to the U.S. market. So welcome, my friend.
Well, thanks for having me. Thank you.
And so I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Performance is not past performance is not an indication or promise of future performance. We are, those of you who are in Hawaii, I don't know if there's anybody on board online here in Hawaii, but I'll be doing a presentation to a options group down in downtown Honolulu coming up on the, I think it's the 27th of January, and then we'll also be following up with our Bay Area Moneymakers meeting on the 3rd of February. Then to be followed up in March, we will be live at the Masonic in San Jose, California on the 3rd of March. So we'll have some fun with that. With the Bay Area Moneymakers, what we've been covering over the last, or this year, we're going to cover the 10 fatal flaws of trading. And we'll dissect every one of them every month, so that hopefully by the end of it, you basically can address any of those issues or any of those errors that you may be making or fatal flaws that you may be making in your trading to get rid of those and make a correction. The one we did last month was, what one did we do last month? My memory is slipping. That's what it was. So, a reminder from Dan Zenger. Those of you, some of you may subscribe to Dan. He's got a newsletter out there. But he basically, your job as a trader is to wait for the best opportunities. Money is made in stocking and sitting, not being active and forcing a new trade each day. And I'll expand that a little bit. That's each day, each week. Basically wait for the triggers to come along. And sometimes we traders, we do not like to sit on our hands and do nothing. I think it's partly due to our work ethic in that, well, you're not really working unless you're doing something. And we think our doing something in trading is actually placing the trades and back and forth and all that kind of stuff. And in reality, that's not necessarily true. The placing the trade and just managing the trade is a very small percentage of what we do when we are trading. So what do you think about that statement, Michael? I think this is a new statement since the last time you were on.
Yeah, I kind of like it, and it's very true. On the other side, there are also, especially in the option area, strategies that make sense, that give you kind of something to do day by day.
Right. That's absolutely true. So I want to bring everybody just back to, and this was a slide I haven't shown in a while, but the reality of trend trading. One, it was we have to identify the trend, define the area of interest or value. That's part of our analysis. And then once we define that area of interest and our value, that's the place where we're going to be taking action. Define what our trigger will be, what strategy we're going to use, and then what are our targets from there. Both our stop loss target, which we don't want to have our prices go there, but also our profit targets. These are things that we recognize that we can only control when we enter and when we exit. Everything outside of that is not within our control. So I think Peter Brandt says it best when he says, never chase a signal, never. There will always be another day, another market. If you miss a move, so what? So what? And then I like to add to this, if the mechanical side of your trading isn't working, check your mental, your physical, and your spiritual side for a breakdown. And I know one of my mentors used to always tell me, he would say, you know, the best trade of the year comes around about every 2 weeks. And I truly believe that and continue to practice that. So what I'm going to try to accomplish with the Making Money Trading Stocks webinar is, one, timely actionable intel review at the end of the week. This goes hand in hand with the webinar that we do on Mondays. And this is a free webinar for both premium active trend trading members, free newsletter members, and anybody who wants to attend. So if you want to share this information and share these free webinars with anybody, please be my guest. We'll do a quick market review, stocks and ETF performance, how they're doing, any type of bonus trades we may see setting up, and then proceed from there. So here's where we sit as of going into the finishing off the third week in January 2018. The active trend trading primarily is up due to what we've done with strategy number 3. We have pulled in a little bit on strategy number 2, and we took a small hit on strategy 1, although that's being actually taken care of with a Netflix trade that we're currently in. But the foundation positions we put into strategy number 3 have basically accelerated and grown in value, and so we'll just take that and run with it. What are the indexes telling us? Here's the thing that I'm finding very, very interesting. I'm going to go to, there we go. Here's the S&P. The S&P now has gone up here. This is an hourly chart here on the left, daily chart here on the right, or on the middle, weekly chart here on the right-hand side. The thing I want to call to everybody's attention is what we see on the weekly chart. Now, what do we see on the weekly chart? Well, that, my friends, if we finish approximately where we are right now, will be a hanging man. Oftentimes, a hanging man is considered a reversal signal. Now, I recognize we had one right here, nothing happened. We had another one right here, nothing happened. It's not one of our strongest reversal signals, but we have to pay attention to it, because what are some of the things that have happened since we got this one and this one? Well, one, prices have continued to drive away from the moving averages. They're further away from the mean, and therefore there should be a reversion to the mean at some point. Secondly, TSI, the momentum, has pushed up very, very high. It is, I mean, this weekly momentum, typically it was the max high was around 60, and that has been going on for years and years and years. As you can see, we are up at 84, and so one would anticipate we would get some kind of a rollover. TSI on the daily charts, in fact, has rolled over as we've continued to move sideways. What kind of candlesticks are we looking at here on S&P? Well, one, we know we now have strong, let me draw that in there again. We have very strong resistance right here. Right approximately there. So that's at, so where is that at? That is at the 2805 level, and so we have hit our heads up. Now, if it busts through that, then we're basically going to continue moving up. But TSI looks weak. Market forecast, we're not getting up to new highs with that momentum. Momentum on a daily chart has in fact turned over, and as I said, momentum on these weekly charts is basically, at an all-time high. Last week, we had a 3-line bearish cluster in the market forecast for the weekly. And the interpretation of that is typically once you get a 3-line cluster somewhere between 1 to 4 trading periods, and since this is a weekly chart, between 1 to 4 weeks, there should be some kind of a pullback. Will it happen? We don't know, but that's our interpretation of it at this point. So, Michael, anything on the S&P that catches your attention?
Not really. I mean, what you see, and you mentioned this, that from kind of a logarithmically linear curve,
yeah,
it's now kind of parabolic.
Yes. Yeah, I'm glad you brought that up because it went parabolic. It kind of, well, we were tracking along this way here. I put this chart on there, so we'll just go ahead and draw that line in there. It probably won't show it. Yeah, it does. Barely shows up on the daily chart. And then we went into this chart here, and then back in, I think this is November, it basically started to accelerate again. And then right here at the beginning of the year, it started accelerating again, has gone really hyperbolic. I mean, the angle of attack on this particular upsurge, Michael, is not sustainable.
Yeah. But, or just, I think that's really something you hear from an international investor. I mean, if you have, so I, as my living expenses are not in US,
right?
I mean, if I look to my my Swiss franc noted portfolio, I mean, I see very strong how the dollar almost kind of collapsed in the last days.
Yes.
So if you take into consideration, the curve flattens.
This is the dollar up. It's the ProShares Dollar Index bullish ETF. I don't know if it's a margin, but yeah, this is where you see it falling on a bed. This is one of the reasons why gold has been rallying. Michael, are you still there?
Yeah.
Okay.
Sorry. No, but say it again. There was a problem.
Oh, okay. No, this is UUP. It is a dollar ETF. Let me put it back up there. PowerShares Dollar Index Bull ETF. I don't know if it is a leverage one or not, but I kind of
no, it's not, and it's a basket of the major currencies of this world.
Oh, okay. And well, is it? Are we sure? Because if I look here, see, because it says dollar index.
Yeah, but it measures the dollar against a basket of the major currencies of the world.
Okay. So, gotcha. So
I think the far more biggest position is, of course, euro.
Yeah.
And then a little bit pound, Canadian, Australian dollar, Swiss franc.
So it definitely shows the dollar weakening against those other currencies. So let's take a real quick look at NASDAQ. NASDAQ is also basically showing similar characteristics as the S&P. What do we have? Another hanging man on a weekly chart. We've had them in the past. And so at this point, we don't know if that's going to be a telltale sign that we are going to flip and fall, basically go into a pullback down to the moving averages, the 8 or this is the 8-week, 20-week. But look what we've got going on over here. We've got TSI has pushed back up into a level that it typically gets to and then reverses. That's where we're at this week. And so we could get a really good pullback down into the 660 level, 6,600 level, and just be part of a natural pullback. Again, one of the things I've noticed, and oftentimes accompanying a potential top, you'll see the momentum indicators start to narrow, which means that there's no momentum going either way. There's kind of the buyers and the sellers have balanced themselves out, and so we'll see if that's the play takes place on this entity or not. But as we can see, pushing up, it also is gone parabolic, The one that hasn't gone parabolic yet is the Russell. The Russell has just been kind of punching its way higher, punching its way higher. It has not been participating with the drawings. It has not been participating with the other two entities, the other two tracking indexes that we track, being the S&P and the NASDAQ. But it's in a nice uptrend. But it too is kind of showing a reversal type weekly signal here, kind of a hanging man type of sign. It does have resistance up here at the 1603 level. So watch it next week. And again, it too is well extended away from its moving average on the weekly chart. And at some point, we can expect a pullback into those areas. Will it be next week? We don't know, but we'll see. Anyway, again, market forecast week on the daily, a cluster just several days ago on, that looks like that's Tuesday or Friday of last week. And as you can see, just kind of a sideways move. Haven't really broken down. It's still maintaining the uptrend. So as long as that uptrend is maintained, we're good to go. Let's get back over here to the other things we're working on. Remember seasonality. We anticipate NASDAQ seasonality. It kind of tends to be a little bit flat during the year. That's not what we're getting this year, as you're very much aware. January, NASDAQ just took off and got up over 4%. But we're in this period of the year, so it would not be surprised to see some volatility kick in and pull it back into, what it typically does. But normally in the March time frame, latter part of February, first part of March, you'll get a bid in the NASDAQ that will force it to go higher. What we found last year in following seasonality was that what we would get was it would pull into a period here, and what we'd have is this particular point on the chart would happen typically within plus or minus 15 days, 15 to 20 days of where it shows on this seasonality chart, which captures 20 years worth of data. So somewhere in that range, and that's where, if you are trading seasonality, please mark your charts up so that you can be looking for, okay, here's where I expect seasonality to hit for the, in this case, this would be the end of the year move here. But that's when I expect to meet, somewhere between first part of September and the last part of October. So it's very important to keep that in your, view going forward. Russell, same type of thing. We're here with the Russell. Russell will typically get a bid towards, into February and then make a nice run up into the April timeframe. And what I found, if you're an IBD trader also, the IBD 50 tends to follow a very similar pattern. You will get a pullback into the first part of the year, normally. That's the tendency. And then you'll get a rebound somewhere in the February-March timeframe that'll give you a nice little rally into the end of April, maybe extending into May. Another pullback, and then kind of a flat period all the way through about August, a little bit of uptick there, and then October is where it really kicks off. And oftentimes with the IBD 50, keep this in mind, is once you hit a low point for the year, which tends to happen in January, February, or March, that next run from that low point up to the next high point, again, tends to be the major run for the year for that individual stock. Now, there are exceptions to the rules, but overall, that's what our research has shown us. So next week, we will get this updated. Here's where we were as of last year. And so I won't spend a lot of time there, although I was very pleased with our win-loss ratio for the year. And so remember, active trend trading system. basically our motto, and we continue to try to clarify, simplify, and multiply to help all our members multiply. For any type of market conditions, we depend on the 5 pillars of active trend trading: what to trade, when to enter, when to exit, what strategy we're going to use, and what to expect. We have 3 strategies. On our entry and exit rules, I have 4 entry rules and 6 exit rules. Okay, focus for January, the week of the 21st January, moving forward. We've got a lot of earnings coming on. As we can say, we entered a earnings trade on Netflix that we'll be covering in the final hour, which comes up at 12 o'clock. And then strategy 1 setups is what I'm looking at. I would like to get my strategy 1 portfolio building positions into place. But to do that, I've got to get some pullbacks. Some pullbacks, price action pullbacks have got to take place. Strategy 1, enter Netflix, pre-earnings run. We'll close this position prior to the close on 122. It reports after hours on 122. I do not want to be left holding Netflix going, after, the end of the day. I also have a strategy 2 trade going. What we're taking advantage of here is implied volatility. Normally going into into earnings, and I don't know if you do these earnings trades or not, Michael, but going into earnings, volatility tends to ramp up and increase sometimes dramatically by 30, 40, 50, 60% or more. And so if you get a little bit of movement with the underlying stock plus a close to an at or slightly out of the money option, you can actually take advantage of this implied volatility spike, and again, closing that position out prior to earnings. So, Michael, do you ever do that particular trade, or basically buying into earnings and then closing right before earnings finishes?
Yeah, I do a lot.
Okay.
But even I like it for really an overnight trade.
Okay. Okay. So you'll buy do you buy going into earnings, or do you buy the earnings date itself?
Before, 1 day before. So best time I think is about 1 hour before.
Okay.
And then a coach told me this, and the next day you run like a thief in the night.
That's right. Yeah. And so, yeah, I tend to look somewhere between a week to 2 weeks out to be setting up our position, because if you can get it just at the right place, man, that implied volatility really takes off. Our leaves positions are in position for strategy 3. Early warning alerts. Yeah. So here's what we've done so far this week. 1, we had two BABA contracts that we basically sold, the 187.50 calls that expired today. We bought them we sold them for $1.35. We bought them back today for $1.28. So we made $2.14 on that. We sold a Tesla 1 put call. If you remember that, we did this last Friday. We sold it at $4.75. We got stopped out on it earlier this week. Stopped out for a profit though. We bought it back for $2.44 for a gain of $2.31. Some people have asked some questions about this, where you sell something and then you buy it back. The same kind of concept of what you expect when you're selling and buying something should apply. So when you sell something, you want to sell it back for as much, or sell it for as much as you can get for it. At the same time, when you buy something, you want to buy it for the, or buy it at the least amount you have to pay for it. So here, hence, we are still following the old concept of buy low, sell high. We just have the order of when we buy and when we sell switched. So for the week, 444.45, we have, sold contracts, 279 call in spiders, at 188, and that's open. That'll be closing out that sometime next week. We also sold two 347.50 calls in Tesla for $7.95, and if that gets down to around $4, I'll go ahead and buy that back and meet my objective for the week. And here's my objective for the week. On the straddles I have, the Spider trade so far is up 15%, the Tesla trade is up 13%, and the BABA trade is up 5% for the year. So quite pleased with that. Here's a new edition of the go no-go table, just real quick. A couple of things we've added to it is one thing to our good friend Eric Golub. He has basically done some research and found out that for the FAS combo, that this R1 RG SFS, that's a index, excuse me, an index for the Russell, but for the financials. And then also this dollar sign SPSIBI, that is the S&P index for the biotechs. And the other thing that I've added in here, guys, is basically here's the leverage ETFs that we're looking at trading depending on what the charts are telling us. So UPRO, and on the left is the bullish one, on the right is the bearish, and that goes all the way down to the 7 ETFs that we trade. Then we get into our core holding, core stocks. So this has been very a popular feature because basically I define every Saturday or Sunday and get this posted for what I'm expecting it to do and how we can trade it if we have a signal like here on gold. Yeah, we had a setup and how we could have traded that. And that's the other thing we changed off on. We were trading nugget and dust. However, it turns out this JNUG and JDust is the juniors of the previous ones I mentioned. These go up about a third more than nugget and dust, and so they have great, plenty of volume. So they're very, very liquid. I mean, 19, 20 million shares per day. So that works. So we'll keep on watching those. Come on, there we go. Our Tesla trade is underway. Right now, I'm working. We've increased our capital, where we're now working with $5,418. And what this is, it is a lesson in compounding. In order to meet the objective, I'm taking $5,000. I want to gain $38,335. And to do that, I need to gain about 4.35% on a weekly basis, compounded over 52 weeks. I should have enough to pay cash for that little Lexus that my wife wants so desperately. Desperate, she's hearing what I'm saying. She's laughing at me. Anyway, okay, well, Michael, that's it. All I have for today. I want to say, hey, thanks for joining us. Yeah,
that's great. Thanks for having me.
I will take I want to pop up 2 charts that I am looking at. I want to show you the Netflix trade because for a couple of reasons. One, why is that not taking my? There we go, Netflix. We got into Netflix, and I wanted to let everybody know. I put out an order yesterday for the premium members that I was going to go into Netflix for a pre-earnings run. Now, I might have wanted to close that out today when it popped up here to just short of my target. However, I went ahead and held it and didn't close it up here, but I've got a call to the implied volatility. But I want to look at here. Look at this beautiful setup on an hourly chart. And there's the first thing in the morning. We get the TSI tick up, holding support at just above this is the 50-period moving average on an hourly chart, which equates to the 8-day moving average. And then we get a nice little move up, and it, just an excellent move. And it looks like we may be getting ready to move higher up. So we got into this trade at about $19.06, which is about there. And so, as I said, so I wanted to basically just chat that with you. And again, it has earnings here after market 122, and that's why we'll be closing this out prior to this. No, that's okay. So that's one. Secondly, the other ones we're looking at are BABA. BABA's looking kind of interesting. BABA. Okay. I highlighted this earlier in the week where we got this reversal off of BABA, and it pulled up all the way to the 8-day moving average. And I basically said, if this is a reversal signal, this big selling last week is a downside signal on BABA. It should pull up into the 820 combo and then reverse down. And sure enough, it pulled right up to the 8 and now is in the process of reversing. I'm not going to take a position on it right now, but it may drop back down to the 180 level, or even to the bottom of this candlestick, because I have earnings coming up on 2/1, so that's why I'm holding off on that. And then lastly is our buddy Tesla. Tesla also has earnings coming up around the 20th of February. It's looking like it wants to roll back up, but I'm getting cross signals. I'm getting a roll up, a bullish trigger on the hourly chart. I'm getting a rollover, not quite a bearish trigger on the daily charts, and a bullish, not a trigger, but a bullish continuation on the weekly charts. And so I'm just sitting there going, what's it going to do? I would like Tesla to give me a nice little pullback down into, probably the 340 to the 335 level to get into a potential new pre-earnings run. But this candlestick right here, that is a shooting star. That is a bearish reversal signal. So that's is that going to be fulfilled? We'll see. We'll have to just wait and see. And Barb wants to know, were you scared last weekend when they issued a false alert about the ballistic missile? And Barbara, the answer to that question is no, I wasn't, but it's not because I'm some brave guy or anything like that. But it was because Michelle and I never got the signal, so we had no clue that the alert was going on. So in that case, ignorance was bliss, and I just sat at my coffee bar and had some nice coffee and didn't know what had happened until later on. So with that, Michael, I bid you adieu, my friend. Thank you for joining us.
Well, thank you for having me.
I'm glad you're back from Russia. And so for premium members, we'll be back at the top of the hour for the final hour. So good day, everybody. God bless. Bye, Michael.
Bye.